Hey everyone, it is Evan here from theTradeRisk.com, and in today's video we're going to be discussing some trading tips. These are lessons and things that I've learned over the years being an active trader and researching markets for a number of years now, and I'm going to bring them to you at mostly a high level. We're not going to go in depth into any one of these areas, but I do have some articles and some additional sort of resources for those of you who are interested in some of these topics and for learning more. We also did publish this as an article, so if you go to theTradeRisk.com, you can find this article there if you rather read through things, get the links that way, see the images. I'll also link it up right now in the top right-hand corner. There should be a link appearing. You could launch that article now and head to that format if you rather view it there. Finally, if you do like this video, check out the rest of our YouTube channel and website. We have plenty more educational lessons and research, trade ideas, things of that nature. So with that, let's jump into today's discussion, and we'll start by sharing a little bit of an insight here. If you haven't been trading for a while, trading is difficult, okay? And let's underline that difficult because it's something that we may not hear too often. Anyone who tells you otherwise hasn't traded long enough or is trying to sell you something. That's something I truly believe is talking to a number of traders and people in this field. That generally is consensus there. If people think it's easy, if someone has got it all figured out, that's generally someone that is very green in this business, or again, you want to hold on to your wallet because they're going to try and sell you their super sexy crystal ball system. So I don't have all the answers, but I have learned quite a bit, and that's what I'm going to try and share with you today. The perspective of everything we're going to talk about is swing trading, but it's really applicable to all time frames, strategies. You can sort of mold it and pull it from that swing trading aspect. So with that, let's jump into it. Number one, proper risk management and position sizing will solve 80% of your trading problems. Now, if you've been an active trader for a while now, if you've been researching on the education side, you're probably sick of people talking to you about risk management or reading these articles, but they are so important. If you're just starting out, this really will solve 80% of your problems. That's what I believe, because once you have a handle on position sizing and risk management, you can actually start to develop as a trader, right? It's all about staying power. So my early days of trading was the equivalent of being trapped on a roller coaster. I would be all in on one or two or three stocks, or even worse, options at times, and my account equity would just swing violently. I had no real grasp on risk management at all, hadn't really learned it, and if I did read about it, I certainly didn't really care about it because all I wanted to do was make money. So it generally takes blowing up an account or two before this lesson really sinks in. Again, from talking to a lot of people, that seems to be consensus. Absolutely hats off to anybody who gets this without feeling a whole lot of pain. Generally, people kind of give it the, yeah, I know treatment, but they don't actually implement it properly. And again, it usually comes with a lot of pain before you start to understand, okay, I actually do have to pay attention to this position sizing, this risk management thing. And, the way I look at it is, you really need to get to the level of just making risk management as natural as brushing your teeth in the morning. For me, honestly, as I wrote this slide, it's funny because, again, in the early days, I want to, try and forget about those days of riding that roller coaster. But nowadays, I don't even, it's never an issue, right? Where I'm always, the first thing I'm doing is just absolutely controlling risk, and I know what kind of size, I know the instruments, and I just have the experience and screen time at this point, and I've seen the pain, I've endured the pain to know what I should be trading, how much size I should be putting out there. So this is just very, very natural to me at this point, and that's the level I think that we all sort of want to aspire to. And one last point before we wrap up this first tip here is, once you figure out risk management, or once you have that system in place, once you're always adhering to a certain kind of structure, you can really start to focus on the other things. It's this weight that gets lifted off of you, and you can actually start to focus on the more interesting things of trading, like research and trading strategies and working on your psychology. Those are all things that you can start to do once you start to actually position size correctly. So that's the first tip: proper risk management and position sizing. Number 2, master a single strategy or setup and then expand. So there's my image right there of mastery. I hope you enjoy that one. So here's kind of a flow, and this is all kind of presented at once, but start from the very top. Try everything initially. I believe that if you're a new trader, you should be trying everything. You should play around with moving averages. You should play around with MACD and RSI and trade different time frames, trade different instruments. You want to get a taste of everything. And really what you're trying to do in that experimental phase is just figure out what makes sense to you. What do you like? What do you hate? What is completely just foreign to you and you don't like or understand something, Fibonacci, whatever it is. You're trying to just get out there, get your hands on everything, and start to figure out what makes sense to you. So I believe you start that way, but then after a few months, maybe it's a half a year, maybe it's a full year of just exploring, you really want to start to specialize. You really want to start to narrow down and start collecting the things that make a lot of sense to you. And maybe it's principles like trend following or mean reversion or something at a higher sort of level, but you really want to start taking these concepts and bringing them in and start specializing. So that's what step 2 is after a few months, start to specialize. And then when you get to phase 3, it's all about this iterative process of researching, trading, adjusting, documenting, repeating, right? So you're just really narrowing down on 2 skills. Let's say you love trading natural gas, and let's say you love trading breakouts, and let's say you don't like holding positions overnight. Well, there's your recipe for a day trader who only trades breakouts on natural gas. And it may sound a little funny, but I believe that traders should really start to specialize and really know the ins and outs and everything that can be known about trading breakouts on natural gas. You want to be able to see those setups in your sleep and really just start to be able to understand what goes into them and build that intuition of what feels good, what looks good. And if you don't like the intuition side or the discretionary side, this can be done completely as a quant, right? You can back test your strategy. You can really pull in these variables. You can do all kinds of different, simulations with some different indicators and periods and adjust and kind of tackle it that way. So however you want to approach it, I think the key here is specializing. And once you've really mastered something, right? Once you absolutely know the ins and outs of trading natural gas intraday for breakouts, then you can move on to something else. That's the process that I believe in for new traders. I think you want to, again, starting from the very top, try everything, narrow down, specialize, and then master a skill, and then go on to something else. And it's simplified. We're leaving out a lot of in-between steps, right? Sometimes the things that you really like may not be profitable. They may not have an edge. That comes in the research and sort of adjustment phase, but you may have to, completely scratch an idea and quote, waste 3 or 4 months of your life in one thing, but it's not wasting. You've built that knowledge, you've gained some experience, and now you're going to try and apply it to another principle or concept. So that's tip number 2, master a single strategy and then expand. Number 3, adapting to the market environment is vital to success. And this is one that I've written about quite a bit in some other blog posts that I'll link you to, but trade the market you have, not the one you want. You may have heard that quote out there. Some setups just don't work under certain conditions, right? If you want to trade momentum in breakouts and look for big ranges during the last holiday week of the US markets, that's not going to work. There's just not enough participants unless you have some crazy event going on at that time. Ranges are usually very tight, quiet. There's not much volume. Things are dull. You can't trade that same breakout strategy during the last week of the year or those holiday shortened weeks. This applies in basically every other context. That's an extreme example, but trend following, mean reversion, right? These high level concepts, these principles, these ways of trading, there's particular market environments and structures in which they work best in. So markets are complex systems. They're constantly evolving in front of our eyes. The market we have right now is different than the market we had yesterday. There's different participants in there. The mood is different. There's new news on the day. So markets are constantly just taking in all this information, and they're reallocating it and just redistributing money, and that's something that you need to pay attention to. So recognizing when your setups are in sync is the difference between break-even and profitable trading. So I really believe that a lot of people should spend more time thinking about market context and sort of dynamic markets, figuring out when their systems are performing best. Sometimes to me, trying to completely optimize a system or looking for the absolute perfect entry, I think, close is sort of close enough. When you get to certain points there, let's just agree on something, stay consistent with it, and then think about these other factors like market environment and adapting and understanding the context. And I think you could, push further and have some bigger developments and strides in your systems and profitability when you focus on this. So that's tip number 3. Number 4, learn to love your trading losses. Now, this is a little bit of an interesting one. No one likes losing, of course. I hate to lose. I hate losing trades. But if you're someone who dwells or takes things personally, trading is going to be a never-ending battle. If you're always thinking, God, why did I get out yesterday? The thing is 5 points higher and I'm not in it now. If you can have that thought, you can have that initial reaction, but if you're someone that's going to dwell or keep looking at a chart or a name that you were previously in that is no longer in your system setup or actionable for you, you really just need to let that go. And it's very it's easier said than done. I completely understand that, but this is something that you need to work on if this affects you, because losses happen often. We're traders. Most systems, most strategies will lose half of the time, and if you're dealing with that emotional drag half of the time, that's going to be just very problematic for you. So what I suggest, and I document this in another post that I'll link you to, is create a review process for when the inevitable drawdown rolls around. If you've taken 3, 4, 5, 6 losing trades in a row, maybe have a checklist, maybe have something that you step back and just reflect briefly and just, look at a bigger picture. Don't get angry with the individual losses, but you're trying to figure out, is there something more structurally wrong here? Are these losses acceptable? Did my strategy or system or rules still tell me to get into that? And is everything fine? If so, you can kind of give it the thumbs up, take a good walk, maybe take a weekend off or a few days off, and then come back and tackle it fresh. So create a review process. I'll link you to a post that has more in-depth info on how I do that. Number 5, I believe this is, have realistic expectations. So there's a nice high quality image of a money tree, right? Because everybody comes into trading looking for money, looking for the easy dollar, and that's how they get attracted to markets, and that's what lures them in. And that's just not the case, right? 6% per year and 50% plus drawdowns. That right there is the S&P 500. So if you want to just be a buy and holder and you want to own the stock market, the S&P 500, you're going to have to accept that your long-term historical average returns going to be 6%, 7% by some measures, depends on how you want to calculate inflation, but it's about that level. And again, the drawdowns, think of 2001, think of 2008, and of course, many others prior to that. Those are certainly just in the recent 10, 15 years. We've seen drawdowns of this level. So again, when you come into trading thinking you can triple or, make $1,000 or $1,000 a day on some $5,000 trading account, you really just need to get some perspective and understand what averages and what kind of returns are. Some of the best fund managers out there, granted they have a lot of money, it's harder to allocate to certain situations, but they have great information, technology, and research. They average 10 to 20% per year, and they have drawdowns of 10 to 20%, and those are the best. I mean, that's the upper echelon that are averaging long-term historic numbers of 10 to 20%. So to say that you're going to come into trading and make 500% per year, and you've only been trading for a year or two, it's just not realistic. And the way I look at it is people ask me, what's a good return? What should I be achieving for? I mean, honestly, can you beat the S&P 500 with lower drawdowns? And can you do it consistently? And that second part is very importantly, right? Because a lot of traders will get in here, have a good win streak, or have a great year even, and think that it's all figured out and life is good. Where markets, again, back to dynamic markets change. Even for an entire year, we could have a nice bull healthy run where the market kind of goes straight up. And until you get that experience of a sideways market, a down market, a volatile market, a news-driven market, those types of things will change your return profile. So doing it consistently and always factoring in the drawdowns, right? Some people only like to think about returns and say, well, Evan, I can make 300% per month or per year. That's no problem. These options contracts, this is how I do it. And, I'll nod my head and agree. But what is the risk that you're taking, right? If you're trying to achieve 300% profit per year, believe me, there are traders that can do it. I'm not knocking this. I'm not saying it's not possible, but I'm just saying that those types of people are rare. And to do it consistently and to do it with a risk profile that would not make you want to throw up everywhere when you suffer a 70% drawdown, that's going to be difficult. So make sure you have realistic expectations. I think that's very important. There's plenty of research out there to sort of get a handle on what averages are. Our last tip for this video is systematize and automate where possible. So once you've specialized in a niche setup or trading style, I think it's a great idea to think about automating everything that can make your life easier. I mean, hell, even if you're not at that specialization phase, I think you can still automate things to make your life easier because that's really what we want to do, right? The easier life can be, the less decisions we have to make, the more we can allocate our sort of mental energy and capital towards trading and other things that can hopefully make us money. So a couple of things that I've automated at the Trade Risk. First off, which I don't put here, is general scans. So scanning for leading stocks, scanning for trade ideas. I have things that I've written in TC2000, so little scripts that will scan the market for me. Those are available in a lot of different ways and platforms. But really the two pieces of code of actual kind of structure here that I've automated, first is position sizing. So again, a pretty simple concept, but position sizing trades, that risk management aspect, I don't have to think about that anymore. It's all automated for me. So I've created a position sizing calculator. It's not super complicated. It really just pulls in volatility. It pulls in where the stop loss is. It pulls in my risk profile and tolerance and preferences, my account size, and it just aggregates all this information for me, and it spits out basically the optimal number of shares I should be entering to be fully protected, to be able to sleep at night, and I don't have to think about it. I just have to put in maybe a volatility measure of the stock I'm about to trade, and then the entry and the stop loss, and it does everything else for me. So position sizing, one thing I've automated. The second thing, market health and some breadth measurements. So I love market internals. I've written a lot about them. There's plenty of videos here on this YouTube channel to jump more in depth on that topic if you do like them. But I love looking at market internals. They're a big integral part of my trading. And what I've done is I've actually created a indicator, if you will, where it aggregates in a handful of different sources of market internal data, and it spits out sort of one score, one actual measurement for all of them. And it really just simplifies things. It helps me understand sort of where everything is. It gives me some context, and I've included that with market health, and I've created a dashboard. Depending on when you're listening to this video, this may or may not be released and out on the Trade Risk, but created a health dashboard that kind of looks at trend, momentum, and breadth, and kind of gives me that aggregate market outlook. And then I can allocate certain capital to different environment types that we're in and find the best trading strategy and so on and so forth, and get on with my sort of execution part of my trading strategy. So the point is, what can you do to make your life easier as a trader? What can you automate to make your life easier? Maybe it's your whole trading strategy, but think about some things. I think that's important and something we're not talking about enough out there, especially you discretionary traders out there who are completely making all of the decisions for yourself day in and day out. So that is the end of this video. I hope you guys enjoyed it. A little bit lightweight. Be sure to check the links below, and if you want some more research, more in-depth articles on some of the topics we discussed, I'll put them in there. Find me on any of these social platforms. You can head to my site, find me on StockTwits and Twitter. If you like the video, make sure you subscribe to the channel, give it a thumbs up, and contact me if you have any questions. Thank you so much. Happy trading. Talk to you next time.